Content creators often have frustratingly variable income. One month you'll have 10 grand come in, the next you'll have 2, and you wonder, how the heck am I supposed to manage my life and money and my business around such an irregular income? That's the purpose of this video. If you're a YouTuber, Twitch streamer, or any other type of creative entrepreneur, unfortunately, irregular income is kind of part of the job. But your income being inconsistent does not mean that your finances have to be chaotic. Today, I'm going to show you how to budget with irregular income so that you can pay yourself consistently, manage your expenses, and feel in control of your money. But before we do that, we have to kick off with a disclaimer. This video provides general financial education and is not personalized investment, legal, accounting, or other advice, nor is it a solicitation for advisory services. Please consult a qualified professional for advice tailored to your specific financial situation. With that out of the way, let's get started. Here's the harsh reality for content creators. Your income might change month to month, but your bills don't. Rent, groceries, software, it all still has to get paid. If you have people on staff, you still have to pay payroll. Everybody wants their money on time. And many content creators tend to guess, or they just sporadically increase or decrease their lifestyle based on the amount of income that they're bringing home every month. But might I suggest a solution and a process that evens out your expenses so that you can make clear, consistent decisions without all of the chaos in between. And the process is known as an income smoothing account. And here's how it works. You deposit all of your income into this primary bucket. And then each month you pay yourself a consistent salary from this buffer account. This gives you steady, predictable income, even though your income might rise or fall from month to month. In another video, we've talked about the different buckets that you should be separating your income into. Ideally, you'll want to build 1 to 3 months of extra, whether it be income or expenses, into these buffer accounts so that you can ride out the ebbs and flows of income and expenses without panicking. But in order to make this work, you actually have to know your baseline. I've created other videos that you can check out on how to actually create a budget for yourself, how to manage your monthly expenses, and there are even free worksheets that you can download. I'll drop a link into the description if you want to check out those videos. Those will be important to determine what your baseline is so that we know how much buffer to actually create and allocate into these different buckets. I covered this in another video talking about the 4 different buckets that you should have within your bank account for all of the revenue that comes into your business. There are 2 primary buckets that the buffer or the smoothing really apply to. The first one is your owner's pay bucket, which is how much you're bringing home as the owner and operator of your business. The second being the operating expense bucket. How much do you need in order to be able to pay your video editor? How much is your software every month? Any other business expenses that you have? We need to know the baseline of how much you need to be able to draw home in order to be able to take care of yourself. And we also need to know how much does the business need every month in order to be able to maintain operations. That will give us a baseline, and then you multiply that by 1 to 3 in order to give you the amount that you should have in that account as a buffer. A quick example is if you as the content creator are bringing home $5,000 a month, that's your income, then you need to have between $5,000 and $15,000 in that buffer account. That way, if there is one month that you have lower income, then you can still withdraw from that account and be able to pay yourself the $5,000 a month or whatever that number might be in order to be able to take care of your bills without panicking. And then same goes with the operating expenses. If your operating expenses are $1,500 a month, then it would be prudent to have between $1,500 and $3,000 in that account as a buffer. That way you can still pay licensing and software and any other expenses that you have to operate as a business. I found that the easiest way to maintain all of this is to have a business account that allows you to either create multiple accounts or have sub accounts. That way you can have different categories, different buckets for your income that's coming in. That way, if you receive 10 grand, then you can disperse that into the separate buckets, and it keeps things nice and clean and tidy. Now, you can do this in a spreadsheet, but it gets pretty messy pretty quickly, and you have to be really on top of your bookkeeping in order for that kind of system to work well. I know that we've covered this in another video, but just to quickly recap, the 4 categories that I recommend splitting income into as a content creator are to have a taxes bucket where 30% of your income goes into the taxes bucket, 30 to 50% of your income goes into the owner's pay bucket. That's how much you can take home or generate as revenue or income for yourself. You have 10 to 20% in a operating expenses bucket. This takes care of subscriptions, any other business expenses that you have, video editors, things of that nature. And then last but not least, a reinvestment or a savings bucket. This can be used to save up for additional gear, video equipment, computers, or even things like going to conferences, having airfare and lodging, or collabs that you want to do with certain individuals. Or if you are saving up to expand your business and expand into some kind of product, then having that additional savings bucket can help whenever those expenses come up. A quick word of caution, it's really tempting if you go from having a small amount of income to a huge amount of income. Like if your channel pops off, it's really easy to want to increase your lifestyle it's really easy to want to be able to spend some of that money. And there's kind of this culture of flexing on social media, buying a fancy car or buying a huge house or something like that. I strongly, strongly encourage you, especially at the beginning, to create a substantial cash cushion. Make sure that both your business expenses, your business accounts, and your personal finances are set. That means retirement planning. That means taking care of insurances. That means covering all of the other boring things, but that really create a foundation for you so that as your income continues to grow, then you have the bases covered. The biggest thing here is that whenever you do have bigger months, make sure that you're topping up those reserves. You can bump them up from 3 all the way up to 6 or even 12 months if you want to take a more conservative approach. But make sure that you have a great cash cushion for both your business and your personal finances. That way, if there are some bad months after that, then you're not taking a hit or panicking. Really set up the foundation so that as your income continues to grow, then you can reinvest properly. You have the bases covered. And yeah, work with a professional who can help you navigate all of those different nuances for your business. Make sure that both your personal and your business finances are all set to go, and take care of all the boring stuff first. Create that good foundation, and then you're kind of set from there. One final note is that having this cash cushion really helps to stabilize your brand as well. So if you were just taking home 100% of the income that's coming from your business and you don't have some kind of reserve set, in a down month, you might be tempted to take a sponsorship or a brand deal that doesn't necessarily align with your values or your audience. And that can long-term negatively impact your brand and your ability to grow. And so by having this cash cushion, it actually helps to smooth things out so that if you do have a couple of down months, then you're not panicking. You're not having to take deals that you wouldn't normally otherwise take. And you have a little bit more patience to be able to wait for a proper brand deal, something that's more of a better fit for your channel, your audience, your community, and a brand that you actually want to sign with. I've seen too many content creators take bad deals because they're desperate, because they need the cash, and they did not create some kind of buffer. Maybe they spent a whole bunch, bought a nice car, and did not reinvest into their business, did not keep some into savings. I don't want that to be you. And ultimately, many of those content creators, their brand, their reputations were damaged because of those bad deals that they signed. So it's important to understand that taking care of the basics whenever it comes to your business and your personal finances isn't just a financial thing. It's helping to protect your reputation, your brand, and will ultimately allow you to grow to, I guess, higher highs than you would if you just were taking any deal that came your way. So 3 quick final tips to make this easier for you. I highly recommend using some kind of bookkeeping software. At the beginning, it can be a spreadsheet, or if you want to get a little bit more sophisticated, use something like QuickBooks, Wave, FreshBooks, Xero. There's a whole host of other bookkeeping software subscriptions out there that you can use to keep everything nice and tidy. This will also help whenever it comes to tax time and for your quarterly estimated tax filings to know exactly what your numbers are, what your estimated tax implications will be. The second tip is to review all of this monthly. I highly recommend setting up some kind of calendar or system for yourself. So for me, what that looks like is monthly going through my accounting, making sure that all of my bookkeeping is up to date. Quarterly, I have to do my estimated tax filings, and then yearly, I have a whole host of things to do within the financial services industry. That's also where I handle my finances or my tax filings and things of that nature. Irregular income does not necessarily have to mean unpredictable finances. By having a system, a buffer, and buckets for all of your income, you can build stability for your business, even when your income fluctuates. If you found this video at all helpful, I would genuinely appreciate a like on the video and subscribe if you want to see more content like it. If you have any questions or any topics that you want me to create content on in the future, feel free to leave a comment below or send me a message. I would love to hear from you. Otherwise, have a great week. See you in the next video.